Don't get me wrong, but I'm bullish on Tesla. If I wasn't invested in it, I wouldn't have invested as much. In the long run, it seemed like an easy bet, though I use that term loosely. But in terms of Tesla, it doesn't take much to reach $50 billion in net income annually. In fact, if Tesla were to return to the kind of margins we saw when the economy was doing better and interest rates were lower, it would already be about halfway there without increasing production, considering that the company currently produces fewer than 2 million vehicles annually. Even if Cybertruck takes 2 years to ramp up and say for Texas and Berlin and megapacks, that is, perhaps by 2026, that alone should be sufficient for the business to be hitting those numbers. Assuming that Tesla have lowered some costs over that period of time, or the industry as a whole, which is what it's striving to do as the supply chain's bandwidth increases, battery costs decrease, energy density rises, and maybe interest rates drop somewhere. If Tesla achieves an annualized rate of $50 billion in net profit in 2026, the stock price will, well, be whatever it is based on the current PE ratio, which is based on the market's irrational manic depressant with bipolar disorder. It will probably fluctuate between 30 and 60, or 1.5 trillion and 3 trillion, or roughly $500 to $1,000. With these figures, I'm not even considering the next model, which needs only about 100 gigawatt annually for 2 million vehicles. The construction of a factory for sales, which we know CODL is capable of doing, is feasible whether it is located in Texas, Mexico, China, or the Middle East. Ron Barron, on CNBC, expressed great optimism about the arrival of Tesla's Model 2, predicting that it will be released in 2025, be a huge seller, and only cost half as much to manufacture. Less expensive, so I assumed he was comparing it to the Model 3 when he said that. Nevertheless, for the sake of quick math, if the Model 3 has an ASP of $42,000 and a margin of 18%, its cost per vehicle is $37,000. If the Model 2 was half as expensive as the Model 3, then it would cost $31,000 without subsidies or credits, leaving a gross profit of $11,500 per vehicle. Now, 2025 is actually a great year to be launching this next model. Indeed, when Mexico was announced earlier this year, we were told that the factory might be built in just 7 months, and many even speculated that production might begin early the following year. Of course, Ron Barron's estimate is probably as good as any of ours to current exchange rate. I'm not sure what the holdup is, but you would think Tesla could have a new factory up and running in a year, meaning that production would start the following year. Of course, the Gen 3 parallel production line will bring down the cost that low, and that, along with the fact that it's a smaller car with a smaller battery and the production method doesn't sound too extreme, makes sense. We've seen the results, the vehicle being torn down, and the entire production line. Drive battery electrode type processors are needed in order to achieve that. This is just EV manufacturing, just like Battery Day. How the front and rear castings fit into the structural battery pack, Tesla did that. Although Tesla has proven that it is excellent at producing electric vehicles, they struggle to meet deadlines for completing other engineering goals. However, 2025 is a long way off without the financial stability to support the stock price. So there may be many ups and downs during that time, but it will probably be worth the wait, even though we don't really know much. We kind of imagined that a $25,000 tiny car would be more suitable for everyone forever. It would simply be good to see what we were waiting for, or have some notion of how Tesla will get there. It is possible for taxis to function without a steering wheel or pedals, and they may not even be available to the general public. Nevertheless, the point is that Tesla's stock price can rise to $500 to $1,000 by 2026 without the requirement for significant technological advancements like 4680 ramping or AI reaching a specific threshold. The truth is that we already know Tesla can create an EVS window. Even if the bulk of that demand may come from Asia or elsewhere, we anticipate there is a lot of demand for a lower cost, smaller electric vehicle, since Tesla can make them very profitable. Europe is a significant market. Since I'm not the only one, I'm just curious as to why it's taking so long and what the holdup is. Elon still believes that Tesla will reach 20 million users by 2030, so how is the company going to achieve 50% compound annual growth on average? Ron Barron also believes this will happen. I'm in the realist camp, which is more similar to that of many of the major Tesla fund managers, and I'm wondering why Tesla is taking so long to release the next model. Initially, it made sense because of the cells. Perhaps 4680 sales would have been the solution. But now that we know that Gen 3 can use any type of cell, that should all be resolved by now, allowing the actual Model 2 factory to start operations. I find it really odd that this is taking so long. According to examples, you aren't even permitted to challenge or inquire about Tesla's actions. Elon knows what he's doing, and how could a mere mortal like me understand how to play 4D chess? Nevertheless, from a relatively conservative standpoint, I'm bullish on Tesla and believe it could double or quadruple in the coming years. Other events could include a crazy AI boom, and the word dojo, which describes the company's division, is currently trending the highest. This could send the stock price into another bubble, similar to how Microsoft did during the dot-com bubble, which didn't reach the same high for another 15 years. These things happen, but if Tesla can reduce its run rate to just 2.5 million with its current factories, and if Tesla can produce an additional 2 million models or 2 vehicles, and potentially make an additional $10,000 per vehicle there, we'll reach $50 billion with vehicles and still assume that FSD has not yet been solved. If we add another 300,000 vehicles with the Cybertruck, we'll reach 2.8 million vehicles annually. At that point, we would have an average profit per vehicle of $10,000, or a total of $28 billion. Additionally, Barron stated that energy currently costs roughly $6 billion annually. He was completely accurate in that comparison. However, Barron also predicted that energy would increase by 30 times to $240 billion, which is a huge amount that would only require roughly half a terawatt-hour of sales. If we are talking about 2030, that is an additional $50 billion. And as I previously stated, this probably won't get any closer until the end of the decade. Sprint Barron is essentially just taking Elon's word for these figures. And the one thing we can pretty much count on with Elon's targets is that they are always delayed. Well, with the exception of the time the Model Y launched early. In any case, Barron has simply reiterated what Elon has previously stated, locking in his actual targets as fact and the foundation for investment. By that point, we're at about $100 billion in gross profit. And by that point, OPEX is probably still relatively low. Net profits, however, are probably going to be absurd. And this could be around 27 or 2028. Feel free to include any other upcoming products from Tesla, as well as the possibility of robots performing or robot taxes. In any case, Tesla is likely close to or over $5 trillion in value, which is more than Apple and Qualcomm combined. This is all the more so considering that the company only sells about 5 million vehicles annually. What would happen if Tesla were to surpass 20 million vehicles, as Elon Musk has stated 5 million from the van? We're not told what kind of models these remaining 12 million will be to get to the 20 million all robotaxis. It's just assumed that they will have some magic models to come out perhaps okay great, and compact alone, plus the other 3 million from the current models, that's about 8 million already, would take us to above $100 billion in net profit. There should be enough demand to support at least 5 to 8 million Teslas annually, in my opinion. Over the course of a few years, I think Tesla will be able to reduce costs to a point where profits per vehicle will approach $10,000. After all, they employ the best engineers who perform exceptionally well. We've just been waiting a long time, basically since Giga Texas opened, to see where Tesla's cell supply will come from in order to reach 5 million vehicles annually when a new factory for a new model opens. I just wish there was some indication somewhere that Tesla is committed to this future. While some of you may simply have faith in Tesla's ability to consume 80 gigawatt hours annually from CTL's new factory, that is not my investment strategy.